Welcome to Oregon Cash Flow Pro. It's time for our weekly H.Y.D.E portfolio update. H.Y.D.E means High Yield Dividend ETF. We're starting to build our portfolio with it. We've got Roth accounts, we've got regular traditional accounts with it, and we're tracking both of those separately. Pretty soon, we're going to have a third one that we're going to be tracking because I'm tying it into one of the challenges that we're going to be doing, our $30,000 0% interest credit card balance transfer challenge, where we're going to do a balance transfer into its own separate account, and we're going to track that and see how it does throughout the year, see if we can pay that back. So be sure, hit that like button, subscribe if you want to follow along for that, or if you find that you're getting any value from this, I want to hear about it. Put it in the comment section below if there's anything that you want to talk about. With that, let's hop into the portfolio update. You can see right up here and on the thumbnail where our current income is at in the Roth and in the after-tax brokerage account. But here is where we're actually going to track it. This is our spreadsheet. We actually have multiple pages. We'll go through a couple of these, the ones that are important. If you need a spreadsheet to track this, we got it from Dividends on Repeat. Hop over to their channel, give them a like and a subscribe. You can get their spreadsheet. Now, we've tweaked it a bit to handle multiple brokerage accounts. So if you need that, if you need my version of the spreadsheet, which is, it's a little bit different and we're adding even more to it, join my channel. It's as little as $1 a month. It gives you access to the Discord, and I share a copy of this in the Discord. So you can use the one that will track multiple brokerage accounts. I have a number of brokerage accounts, and so we get to track all of them in here. So in this one with my Roths, we've got 4 different accounts that we're tracking. And then over here, we've got 5 different after-tax accounts. And this, I'm not going to add the new one for the challenge into here. It's going to have its own so that we can easily track what we're doing for that particular challenge. All right, back to the holdings. This is our Roth. I've got it right here, so it's easy to see. This is our Roth accounts. You can see our current dividend income, $2,737.73. We're currently owning LFGY 575. Make this a little bit easier to see. LFGY 575, 150. MSTY, 250. XBTY, we've got 300. We have 1,700 ULTY shares, and then 100 in blocks. This one being the new one that we added this week. If we go to our cost basis tab, here's where we have any trades that we did this week. So our last update included this one. Today's update is all of these. So we added 125 MSTY. MSTY, the market dropped pretty good. MSTY went down quite a bit. And so we took the opportunity to buy the dip on MSTY. XBTY, same thing. That one ended up popping back up, but Bitcoin dropped and shares went down. We picked up some of that one. You can see the account that we added into, how many shares we got, the average cost of those shares, and the total cost here. And then we picked up blocks. Now right here, we've got the total of our shares across each of these, total cost, and then the average cost across brokerages, which also happens to show up here on our number 1 tab. You can't see that tab, it's right there behind me. The number 1 tab, those are all right here. So you can see where the current price is. You can see the average price that we paid, total paid among all of these, current value of all of these. This is the current monthly dividend income based on the number of shares and the average of the dividend being paid out. We've got our return on investment to date, which does not include dividends. And then we have how much dividends have we received since we bought these shares? And then the return on investment after we account for the dividends. So we are positive by a little bit after all the dividends. Kind of nice, especially because we had a down week in the market. You can see how each individual one is performing here. We have quite a bit of extra dividends coming through from LFGY. And when we look at the actual payouts, our monthly payout on LFGY, $994, $142 on qdte, $324 on MSTY, $533 on XBTY, $682.04 on ULTY, and $60 on blocks. I'm going to talk more about this in a bit, but when I was looking at this, essentially with the amount of money that we have in each of these, $20,000 in LFGY, $5,000 in qdte, $4,000 MSTY, $7,000 XBTY, 9,700 ULTY, and 234 in blocks. I'm not quite as balanced as I would like to be. So ultimately, I don't necessarily want to just be balanced among each of these. Where I want to find some balance is in reducing our actual risk that's associated with a particular fund manager. So YieldMax has a bunch of different funds. But if I only invest, or if I'm more heavily invested in YieldMax ETFs, then I'm going to be at the mercy of how they perform with their trades and how they choose their dividends. And ultimately, if they end up closing up shop at some point in the future. So I'm going to be at risk if I'm only in YieldMax funds. So what I would like to do is track how much money I have among the different people that are employing these types of strategies and these ETFs that are paying out really high dividends. And we may end up with a mix of some that the NAV holds steady. Maybe it comes down, maybe it goes up. But we're going to have a basket among the different types of high yield dividend ETFs. So we're going to have YieldMax, Granite Shares, Neos, Rex. Like there's a bunch of them out there that have certain products that may end up appealing to us. And we want to get a little bit of exposure among the different ones. So what we did here, we added a new tab this week. Now I haven't finished filling it in, but essentially what I'm going to do is I'm going to pull the tickers in with the current value that we have invested in that ticker. And then I'm going to add it all up with the particular fund managers so that we can see what's the total that we have invested with that particular fund manager. Then we can look at what's the plan to diversify here. And I just want one nice, easy place to track this stuff. One way that we can help to minimize the overall risk that we're taking when we get into these. I may need to do its own video on this, but just a quick discussion about the risks for these. Ultimately, the success is going to come down to how good are they at generating income on the money that we're giving them. If they do a good job, it doesn't matter if they're paying us all of the income as a distribution, or if they're splitting it up and growing the NAV, or if they end up having to draw down the NAV because they want to pay out a consistent dividend rate. None of that matters. What matters is how do they do generating the income? If they can make money generating the income, this can sustain itself long term. And these can be a good place to put our money. If we get the return on capital back within a year or 2 or 3, and at that point, it's all profits because we paid for the shares, and they're able to still continue generating income, that could potentially go on indefinitely or until they go out of business and close up shop, which is why we want to spread out our risk among the different fund managers. But the thing we have to realize, and if you're a trader or if you've done this yourself, selling covered calls, buying puts or selling puts, all that stuff is fairly easy to do, and there's safe ways to do it, and there's really aggressive ways to do it. But with any trading strategy, there's a risk of drawdown. And this is where I think a lot of people that don't have experience doing this stuff come into these and they don't know what to expect, or they don't understand what's happening at any given time. So when we see ULTY, and it's way up here, and then it got drawn way down here, and now it's back up. Like there was an actual change in strategy that happened here. But right here, during this period, this doesn't necessarily need a change in strategy. This indicated a likely needed change in strategy. Now, this could just be the learning phase. One thing I've noticed is that most of these ETFs, when they get going, there's a learning phase. And I think during this learning phase, the actual traders that are getting into these, and now you've got this fund that has to scale up. And it's going to scale up depending on how much money people are throwing at it. But they have to scale all those trades up. It is not easy to scale up, okay? It takes practice. So what I see happening here is this is the learning phase. That's what I call the learning phase. And we tend to see this with a lot of these. It draws down for a while, and then it steadies out. Now, I am totally fine being in a high yield income ETF because they're selling calls or they're doing something to generate income. If they continue to just pay out that income and it bounces around flat, like there's nothing wrong with that. YieldMax's strategy is give all the income to the people who own the shares and they can decide whether they want to reinvest. That's the type of fund you would like to see just trade sideways. It only goes up if the underlyings that they're holding, the shares that they're holding, are going to go up in value. Because if they make money on those shares by selling premium, they're going to give that to us. But if they're holding the shares and the shares go up in value, that's not premium generated. That's just appreciation. We should see the stock price come up. Well, that's essentially what I think happened in here. Was the market had a bit of a drawdown and we saw the price come down. And then it went back up as the market came back up. The market came up really strong, and the shares, the underlying shares that this fund was able to purchase, they didn't cover it too much. So part of the change in strategy was they started doing spreads and protecting their downsides. But when you employ spreads, you can participate in more of the upsides and some of the moves that you're in. So the market bounce back allowed the fund to bounce back, but it still generated income and it paid out dividends every single week. This is what we want to see in an up market. You should see this in a down market. You're going to participate in a down market. There's no way to avoid it unless you get some protective puts, which will take away a little bit from the income, but it could save you a bit on the downside. And they did start to employ some of that. So ultimately, we shouldn't see as much drawdown when the market is down as we do here, or as we did here and here. And we should see some appreciation on the underlying shares when the market is going up. But you got to recognize that most trading strategies, when you back test them, there is a drawdown that happens. What's that max drawdown? Can you survive it? Are you the type of investor or trader that can deal with it? Understand what it is. Understand that it's a drawdown, because you're not going to win every single week. Neither are the traders in here. They're not mythical beings that are somehow better at trading all of these things than any of us. I mean, if they do it constantly, all day, every day, they should be better than us. Okay, but not so much that you're going to be able to avoid any type of a drawdown. So drawdowns will happen, and hopefully people aren't going to panic when that happens. There's going to be up weeks, there's going to be down weeks. This is where I recommend check out ETF Inspector's videos. ETF Inspector goes over all the trades in ULTY every single day. You can see, are they actually making money doing their trades? And he tracks it throughout the week, and then he makes his guess on the dividend. But you can see in his spreadsheets, in his videos, you can see, did the shares make money, or did the trading make money, or did they lose money? Those are important things to pay attention to so that you know, do you want to continue to have money with these folks? Now, some people I know were panicking when ULTY came down in price here. Well, it's not like you could have hid from this anywhere else in the market. Did you see what happened in the rest of the market this week? The market came down. It was not a very good week in the market. This is TQQQ. If you look at the indexes, here's SPY. Oh, look, it came down as well. So it's not like you could have sold ULTY right here and avoided this by just going into SPY. Nope, you still would have participated in it. So these things happen. Up and down movements happen. And sometimes we get so focused on one particular ticker that we think that there's got to be greener grass somewhere else. Well, hopefully, if you get into these things, you have some type of a strategy. You kind of understand what they do. Let's get back to our spreadsheet. That was the lesson for the day. I'm probably going to have to put a video out on its own for that. Maybe more people will end up watching it through that. But if you found that helpful, let me know in the comments. All right, so we have currently 2,737 is our projected monthly dividend income, up a bit from last week. I actually wasn't tracking this week to week. I probably should. When we go to our cost basis, we added some here. Here's our distributions. This is one place where we can see how did it go up from week to week. Well, of all those shares that we added, we haven't gotten any dividends yet. So we should see a bump up next week in total dividend payout. This is one of the tabs, and the cost basis tab. The cost basis tab and the brokerage tabs are the new ones I added to dividend on repeat spreadsheet. And then in here, I added this so that we could actually just track the total payout and see how it changes over time. And then I added the fund manager tab. So by next week, this one's going to be filled out. I don't use their other ones. They have some other tabs where you can make a plan for what you want to purchase, and they'll have an overview. If you're using margin, you can track that. I don't get into that because I'm not using any of that for these particular accounts. But if you find that useful, go get the spreadsheet. It's really cool. All right. And then you could do a comparison too. If you're thinking, oh, I want to buy one of these, you can plug in 3 different tickers and see what they do. Let's plug in XBTY, MSTY, and PLTY. Okay, so for some reason, it's not pulling anything from PLTY. How about LFGY? Okay, so we got XBTY, MSTY, and LFGY. Here's the return on investment based on the dividend payout. Here's your monthly dividend. And this is for putting in $5,000 into each of these. So like you can see why I'm starting to grow my XBTY. That one's very attractive. MSTY, bought the dip, looking pretty good. LFGY just keeps paying out. Solid. I have a soft spot in my heart for this one, which is why it's one of my bigger holdings. Now, if you're using this spreadsheet, we can just plug in a different ticker here and it will populate as we plug in buys and sells. So one of the nice things about this tab that I added to the spreadsheet is it will track when you buy and when you sell, and it will adjust your average cost. So you can get your average cost across all brokerages. That was the impetus for me doing this myself and adding to the spreadsheet, because Dividends on Repeat, their spreadsheet didn't have the ability to do this. And a lot of people probably just use one brokerage account, and that's fine. You may just need that one. But I have multiple brokerage accounts where I'm doing different things. I'm married. I track my wife's along with mine. I don't want to do this in separate sheets. Originally, I got their sheet and I was thinking, I'm going to have to do different spreadsheets for all this. And then I thought, you know what? Let me just spend an afternoon or two or three and make this work for what I want it to do. So that's what we ended up with here. And that is where we're currently at. So 2737 here on the Roth. Over here on our regular accounts, after-tax brokerage accounts, we're at 1687 current dividend income. We've received 2,800 dividends to date, and we're up slightly here as well. Now you can see our LFGY, we've got 410, 251, MSTY 20, XBTY 210, and ULTY 850. And here's our current values in those ones. Now we added some share goals in here, but these are just for fun. I'm not actually shooting for that particular number of shares, but ultimately I may end up using this once I get that fund manager tab laid out, and then we decide what other funds are we going to get into so that we can have more of a diversified portfolio among the different fund managers. I think that's all I got for you on my spreadsheet this week. This is our H.Y.D.E portfolio update. Hope you appreciate the time that we spent going over this, and hopefully it helps you. If it did, let me know. Your feedback in the comments is really important, and it does help me to know what else I need to be talking about, because I want to give you as much information as you need that will be helpful without making the videos too long. After all, the goal of this channel is education. We're trying to help people optimize their cash flow, be better traders, understand how to do these things differently. Obviously, we do education about life insurance and all the high cash value life insurance products, which is our bread and butter. But any video I put out, I want to be able to provide you with a ton of value. So if there's anything that you're needing in particular, anything you're looking for, answers you're looking for, you can't find, let me know. I'll see if I can find them. Maybe I already know them. Maybe I can find them. All right. We'll see you guys next week when we update again. Good luck out there, and we'll see you next time. The next 20 seconds determine your future. Subscribe, meet with me, or continue educating yourself with these videos right over here. I appreciate you. Now go maximize your cash flow.